Welcome back everyone to the next video. Today I will be reviewing the Friday market 15 March 2024, continue of the Thursday charts. In Wednesday and Thursday market is showing bearish, and the sell side liquidity of the 29 February low, it has not swept. I am expecting the market to sweep in Friday, as you can see that in Thursday the market has not swept the sell side liquidity. So I will continue my bias on bearish in the Nasdaq 100 indices. Now let's go into the 1 hour chart. In the 1 hour time frame, during the Asian sessions, the market rallied higher and it did not take out any buy side liquidity before it go lower. Right now, during the 7 to 9 a.m., the market is continue to go bearish and it has swept the sell side liquidity here, and it may continue to go lower to sweep the daily sell side liquidity. Now I will go into the 50-minute, and based on the time, what does the market do during the time. In 15-minute charts, the market has swept during the 9:30. The market has swept one of the sell side liquidity of 11 March 2024, and the market during 10 a.m. the market has already swept the daily sell side liquidity. Now during the silver bullet time, I do not know if the market would want to reverse going higher, or it may want to go lower after it reach into the previous area. It will continue to short during the silver bullet time. As you can see, the wick has already swept the sell side liquidity during the 10 a.m. New York time. The Friday is much harder compared to the Thursday chart. If you want to go short, you have to open up your New York opening gap and New Day opening gap to see if the market has reached one of the gap. For the previous video, as what I teach is that the market have to go back into the previous area and it hits the order block and continue to go lower. But right now in the Friday market, the market has already swept the daily sell side. So I do not know that will the markets to continue to go short as the liquidity has taken. So I'm waiting to, if in silver bullet time I can take a long position, and I do not hold much because the market is still in a bearish situation. In a bearish market. For what you have analyzed in the daily chart. Now I will go into the 5-minute charts to see if the market will go reversal, or the market will want to continue to go short during the New York AM sessions. In the 5-minute charts, as after the market has swept the sell side liquidity, I was waiting the markets to break the swing high of 955, as if the market has do a bullish market structure shift, I would want to go long, as because the market has swept the daily sell side liquidity. While at Friday, the breaker is break during the 10:35. This is the breaker block, and after it breaks, I want to see the markets to go retrace back into breaker and continues to go higher into the order block, the 1 hour order block, and maybe the market will want to continue to go short. So if I enter long during the time, I cannot hold that long because the market is still bearish. During the Friday, I do not see any setup during the silver bullet time for the reversal market for long. Now I'm focusing on after the silver bullet time, the 11 to 12, for another setup for short. After I review back to the Friday market, I saw the short setup, bearish setup, but I do not like the Friday chart compared to the Thursday, as the Thursday chart, the market has reached the order block and it shows a market structure shift. Just now I have tell you, if in today market, you have to if the market did not reach the order block, you do not have the confidence to go short. You may think if you go long, as you can see the breaker is break, and the market may want to retrace back into the breaker, and if you continue long until the buy side here, this is a buy side liquidity, buy stops, and you will enter in the break as the market has retraced back in the breaker and it continues to attack into the buy stops, or even reach into the order block, and you will quit your you can close your position. Now I will give you the setup is after I review back the market, which is I do not like the Friday markets. Now I open the new day opening gap indicator, and you can see that the market has reached the gap of the new day and it did not reach the 1 hour order block. For me, if I see in this situation the market has not fulfilled the three confluence of the ICT concept, I do not want to go short during the time, because the first one is liquidity, the next one is market structure shift, the third one is fair value gap, and the fourth one is the order block. The first is liquidity is very important in smart money concept. As now you can see the market has reached in the new day opening gap. If I do not open this new day opening gap, I would consider to go long until the order block, and I do not take any short. If the day I trade in Friday, I would ended up taking a loss if I go long at the time. So in this market, Friday market, you should not trade if the market do not fulfill three of the confluence in ICT smart money concept. Now I will just briefly to show why the market continues to go lower and sweep again the sell side liquidity. If you see in this day, you do not see any setup or the confluence you are looking for, you should not take any trade, and you can wait until PM session or waiting to the next day to trade. If you prefer to trade in AM sessions, you just trade to find setup during the AM session, and if the AM session does not give you any setup, you continue to trade in another day, because in 1 week at least the market will give you 3 days of the good setup. Now back to the chart. The setup is formed in 1 minute. In the 1 minute charts, the market did not reach into the 1 hour order block or even sweep the buy side liquidity in a 1 minute time frame. After in 10:50, the market continued to go lower and lower. It shows a small market structure shift. I do not like this market shift because this looks like here. This do not seems like a swing low. It looks like more like a equal low. I want the swing lows to be the candle to the lower to left and lower to right, and it has a wick lower than the left and the right. So I will consider as a swing low, and you can see the market here. The low does not seems like a swing low. Now I'll back to the charts. The market continues to go lower and lower, and the time is at during the 10:50 to 11:10 the macro time. And I can see the market here is an order block. If the market continues to go lower, if this is a bearish order block, the market will prevent the candle body or the wick is going higher than the order block. So in this order block, I can see a market structure shift. Although that the market did not sweep the buy side liquidity, buy stops, and I could consider this as a market structure shift. As you can see in the 11:16, the green candle body is higher than the 10:04 candle of the body, and after it goes higher than it continues to sweep swing low of the swing low. This is the market structure shift I am looking for. I know that this is not as what you want to as you want to see the market structure shift, but this is one of the method to see the market structure shift. I do not encourage you guys to learn this market structure. I want to see the liquidity sweep of the market structure shift. Okay, let's back to the 1 minute chart. So the setup after this low is sweep. The execution is from at 11:30. You could enter here, and your target will be the sell side liquidity here. This is the entry you'll be entering. You'll be execute on as you have seen the market has reached the new day opening gap and continue to go lower. If you take a loss during Friday, it's okay, because for me, I also do not know where to execute and find my setup, as after the sell side liquidity is taken, I don't know. For me, I will continue to go long because the breaker has break and the sell side liquidity, and continue to go high until the order block or the buy side liquidity. If I execute in the breaker, the market did not show bullish and I ended up losing, I will call it. I do not feel sad, because I follow my concept. I trade what I see, what I saw. After you trade, you just have to hold and let the profit run. If it doesn't, you just call it a day and move to the following day, the next day, and continue to find your setup. And today, I hope you learn the new things, and I also, for myself, I've also learned the new thing after I've reviewed back the Friday and Thursday market. The setup is formed during the 11 to 12 a.m. New York time. And I will talk to you in the next video. Take care.